Hi guys, as I've promised in my introduction, I'm gonna keep this course as simple as possible, but we still need to cover the basics so you can understand the practice behind. So when you're trading with supply and demand zones, there are four major scenarios that you can experience, and I have already created those for you. So if you have an uptrend, what can happen is you have an uptrend just where the blue arrow is, then you have a cluster, as I like to call them, formation, and then you have a continuation. Another possible scenario would be you have an uptrend which goes up to here, then you have a cluster, and then you have a reversal. So I'm going to actually explain in the slides in the training manual. I have written down rules, but just to make it more visual for you and easier to grasp. So what I will be looking for is let's say we have an uptrend and this cluster here is forming, and I'll be looking for the lows and the highs of the candles, and usually between 2 to anywhere it could go up to 5-6 candles, and there is no absolute predefined number of candles you need to look for. But once you start looking at supply and demand zones, you're gonna start finding them on the chart, because what happens is you have this little cluster, then you have a breakout in any direction, so it's easy to spot. But let's say the cluster is here and the price goes to the upside, then I'll be looking for any time in the future, if the price goes down to this lower boundary here where the lows are, and we see the price going below this level, then I'll be looking to actually go long, and this is based on this demand zone that was initially created by the price. On the other side, if we have an uptrend and we have a cluster forming here at the top, I'll be looking at the lows and the highs. So this will be my supply zone, or an area of support. So sorry, an area of resistance. So once the price goes above this level, and I'm sure that a lot of you are familiar with bull and bear trap setups, but this is pretty much what it is. So I'm looking for the price to go above this resistance zone, or this upper red line, and then I'll be looking for a price action confirmation, any sort of inverted pin bar or bearish engulfing on an inside bar, and this would give me a great indication to actually short this particular instrument. On the other side, if you have a downtrend, as you can see in figure number 3, let's say this is the downtrend, then you have a new low here, and then you have formation of a cluster. So I'll be looking for the lows and the highs, so I can mark my demand zone, and then what I'll be looking for is anytime the price goes up to the upper boundary, or this top red line, this is already gonna be an area of demand, and I'll be looking to actually short when the price shows itself and confirms with the price action signal on top of this red line. Excuse me. So it's quite important. A lot of the times the traders are impatient at taking signals once the price touches the lower red line. Sometimes it can work, sometimes it won't work, but the best thing would be to at least wait until the middle, or in an ideal world, to see the price going above this level, forming a short candlestick formation, and then shorting this particular instrument. And the last scenario I wanted to show you is under figure number 4. So again, you have a downtrend, then you have some sort of a cluster formation, and then I'll be looking and waiting for the price to actually go below this level right here and form a price action confirmation. So let's say a pin bar or a bullish engulfing, so we can take a long trade. And it is very important that you wait until the price drops below this level, because there will be lots of cases in which the price will be somewhere in the middle of the trading range, and then it starts going higher. But in this particular case, you might just price might just go higher above this level, and then we might have a scenario similar to figure number 3, and we can see a continuation of the price to the downside. So it's very important to see this bear trap, or the price going below this red line here marking the lows, and then forming a bullish confirmation. If this doesn't happen, you're always risking then that's gonna be a fake, or you're entering a too early into a trade instead of waiting for a confirmation. So if this is still unclear, guys, don't worry at all, because I'll be going through a lot of examples in this course. So that's the major point, and that's why I don't want to really concentrate too much on theory as opposed to giving you pure examples from pure life examples from the world of currencies, indices. I'll be also covering some stocks and shares, and possibly bonds. So yeah, let's move on to the next video now.